What's going on, guys? Billy here from Storm Trades. Just going to do another trade recap from this morning, May 9th, 2025. Trading oil during the New York AM session. Traded and marked up everything live on the uni- um, Unicorn University Discord. So, anyway, let's get started. I'm just going to go through my simple process on establishing the daily bias, how I read the high time frame market structure, and ultimately how I found my winning trade this morning. So, starting off on the daily, I'm always looking for the obvious. What jumps out on the chart for me? Internal to external narrative. And so, right away, and again, this is Friday, so we've had the whole week to sort of play this out, right? So, what I always do is I mark up the previous daily high, previous daily low. Okay. And now I want to take a look at, are we delivering from any PD arrays, right? So we actually are. Yesterday, we dipped into this daily fair value gap, which is our internal range liquidity, and moved higher, right? So I mark out this liquidity rate as well. So if you're looking at this from a standpoint of a swing point, right? So this would be our swing point right there. And we would anticipate, since we closed strong bullish yesterday, we would anticipate um, being able to maintain a continuation perhaps today, right? And so we take a fib of yesterday's daily candle, and if we expect price to continue to go higher, right, we'd want to see the upper quadrant of this previous daily candle support that. However, we also oh, we also get rid of that. We're also currently inside of a daily bearish fair value gap. All right. So we short from daily bearish fair value gaps and above swing highs. We long from bullish daily fair value gaps and from below swing lows. The narrative is telling us we're going higher. However, we were currently in a bearish daily fair value gap when we started analyzing the charts. Therefore, in reality, today I was neutral, right? So I could have expected price to go higher or price to come down and test the at least the 50% of the previous day candle, right? So when I'm neutral, and even depending, even if I wasn't neutral, I'm doing the vast majority of my analysis, the vast majority on the hourly chart, and especially on a Friday, we get to kind of look at the whole week and see how that had played out. So let's go down to the hourly. All right, let's take a look how this week has gone. So we had this large new week opening gap, opening up Monday. Okay, we traded away. We came back and tested it, and ever since this retest, we have been shooting higher. I also would make note here that the most recent change in the state of delivery is a bullish change in the state of delivery on the hourly here, and we have been trading away from that. If I draw a fib from Monday's low, I will see. I'll notice we have yet to even come into the -1 to -1.5 standard deviation. So even though you could make the argument that we're in a, well, you don't have to make the argument, we are inside of a daily bearish fair value gap. The market structure is telling us a story that we should continue to go higher. Now, where are we currently located? When we started looking at the charts at 8 a.m., we were currently located inside of a bullish daily or bullish hourly fair value gap. And we also had another bullish hourly fair value gap right here. Now, if I draw a discount and premium from the swing low, I'd much rather find out from an invalidation standpoint if this lower hourly fair value gap is going to hold. And so that was my invalidation level. My invalidation was, okay, let's see if price come down and what happens when we tap into this bullish hourly fair value gap that's in a discount. If we close below it, I assume that we'd be going lower, perhaps testing this 50% of the previous daily candle. If we used it as support and we saw a displacement upwards, I would look for us to attack this high up here. Okay, so that's my game plan. That was the game plan that I had. And if we move forward to the 9 o'clock model or candle, we came down and we tapped into the hourly fair value gap. At that point, I move into my execution time frame and start hunting for setups. Now, what I'm looking for on my execution time frame is I'm looking for swing lows to get ran, and then for some sort of a distribution higher. And so I'm looking for structure to form. All right. So we'll play price through here a little bit. Boom. We just got a, a what looks like a 10 a.m. manipulation down. When this happens, I'm immediately marking out the down close candle or series of down close candles that took the liquidity and marking this as if we come back and close above this, right? If we come back and close above this, I would look for this to support. I'll move higher, right? But as it stands right now, there's no trade here. Right? We could just continue to blow down lower. In fact, if you look at this hourly candle, we were looking to close underneath. We were looking like we were going to close underneath this hourly bullish for value gap, which of course was my invalidation level. So I am watching for any sort of reversal patterns here. I made a note of this clear M5 fair value gap. And what I would look to see is, does this M5 fair value gap support price going down lower and closing underneath the hourly fair value gap? Or will we invert it, which would be a sign the price is ready to reverse and head higher? Okay. So we'll play price through a little bit. And on this candle right here, we close through the M5 bearish fair value gap, creating an inversion. Now, if you trade inversions, we're delivering um, uh, a bullish hourly fair value gap, I mean, that could be your first entry right there. In fact, many times I'll take a starter entry right there and at lower size and then wait until we start stacking PD arrays above. I also want to make note that this is right here. This is the breaker that I will be looking to enter on. Okay. And if we were to get through that breaker and the change in the state of delivery and invert this M5 fair value gap, well, to me, that's stacking the deck in terms of probability that we will be headed higher. How high? We don't know. But as long as we have a decent draw on liquidity, which we do there, then we have a potential trade idea. Okay. So let's watch price. At this point, we've closed above the change in the state of delivery. Right? We would enter here with a stop. Doesn't need to be at the swing low here, in my opinion, because we have 3 PD arrays. In fact, we have Really, we have four because there's a bullish M5 fair value gap right there. So I'll put the stop here below the IFEG and a take profit at 2R, and let's watch price. We took a little bit of drawdown, not much. And this trade took all afternoon to absolutely get to the 2R. Uh, it got there. And that's it. A solid draw on liquidity. We used sound logic. We went hunting after we engaged with an hourly POI, and we knew from from the daily bias, the price really could have gone either way. Right? We had strong order flow higher, and we could have gone lower, but we had an invalidation level. So we had a what if this, then we do that sort of scenario. Right? All right. Hope you guys have a great weekend and enjoy yourself.